Hi, this is Dave Aquino with MicroQuant, and this is the free video for Tuesday, April 14th, 2015. So I am looking at the SPY today, and also want to focus in on the way our everyday profits trading framework worked out for us this morning. You can see here, this is the SPY, the S&P 500 Index ETF. So we had some general strength into the morning, positive open, and then subsequently we fell for the rest of the opening range. Now we were very patient with our trades here. We defined the opening range low, and you can see we consolidated a little bit, and then roughly a little bit more of a move to the downside. Now looking at this, we're starting to move back towards the low of the opening range. Tried to break a little bit higher, failed. The resistance level held, and then we put in this second bottom. Now this second bottom qualified as a very nice bullish divergence, and then using the opening range low, predicted a move above, back into the zone of the opening range, a pullback to test support, and then the subsequent break higher above this previous high level. And then where do we go to? We go back to the middle of the opening range. We actually continue a little bit higher, and then right around the beginning of the slowdown, right around lunch, we start consolidating again. Now normally this is not a time period that we normally trade, but because of the strength of this SPY staying above the middle of the opening range level, we actually push higher into the high of the high level of the opening range, make a nice double top, and then start to pull back. And roughly we are staying in the middle of the lunchtime doldrums again, below the high of the opening range and moving sideways. But what's very interesting is how we use the everyday profits setup with the opening range box to see how price can move in, outside, and back into, and back outside, and back into this opening range. So we have distinct levels that we can trade against the entire morning, and then gives us a platform from which we could either break higher in the afternoon or break back lower to test the low of the opening range. When the opening range is nicely formed, it can provide us some very good levels to base our trades upon. Now, it's not the only thing we use. We use price setups like this, and also Fibonacci retracement levels are also useful. But in general, the time frame as well as the price levels give us some very, very nice opportunities. This low right here actually was predicted based on the time of the low, and then we followed the price action, caught this right shoulder, inverse head and shoulders, caught the right shoulder, and was able to move it higher. That right there, very good trade. And then a little bit of a pullback, and then a continuation move. But from the move from the low to the high, that's roughly about 1 point on the SPY. That's roughly 10 to 12 points on the ES. So that in of itself is a really good trade. Again, that follows the framework of our Everyday Profits workshop. You can see it right here. It's your go-to guideline on how to trade intraday, as well as it provides support and resistance levels based on a framework that we set up every single day, and it also provides timing in terms of when trades are likely to occur. We use this framework every single day, and it's available to you now on demand. You go to valuecharts.com/day, and you can pick it up right now for the special price of $197. That's $100 off the regular price. I can't tell you how many times I've had people come and send me emails thanking me for the workshop and just letting me know that, hey, just wanted you to know I paid for the workshop today. I've only been using it a couple of days, but the framework works very, very well. It's very consistent, and everything moves right around the same levels we established almost on a daily basis. So I hope you take advantage of this information that'll allow you to make money every day. Okay? Thanks a lot.